Good morning, Jaguars. Today is Wednesday, October 5th, October 5. This is Fahad. Quick morning video again. So let's take a look at S&P chart again, just like we did yesterday. Same wedge formation that I pointed out yesterday. There was an attempt to break down through this, but we came off the lows towards the close, and we just barely basically closed above the resistance. So I wouldn't necessarily call this a breakdown yet. At the same time, there was no attempt to actually reverse and then close on the highs, but the futures are pointed higher a little bit overnight. So the S&P futures are right now looking to open up by 4 points. But it's going to be, and it looks like it's really driven by some of the earnings reports that are coming out, as well as a sharp rebound in crude oil price. So today could be a reversal day. We'll see. But basically, I wouldn't necessarily call this a breakdown yet. Taking a quick look at the crude oil right here, as you can see that it's been gradually climbing higher and higher ever since we had the big OPEC meeting in El Jars while I was away. And so now we're up another 80 cents or 85 cents, $1.75. So we're now actually looking to break out through this level, which was back in middle of August. A critical support called it around 49.50, and we're actually starting to break out through that. This is continuation of this high volume spike that we saw. So this is providing some leadership. Goldman Sachs is out with a note this morning saying that crude oil, they don't see crude oil going substantially higher above 55. The do is going up to 55, but nothing above that unless there is a significant continuous drawdown in the oil inventory, as well as a pickup in demand cycle. So Bank of America was also out with a similar note last week, suggesting that 55 is where they see the target. So basically, most analysts are sitting right around here on $54, $55 levels. So if that happens at all, we have another 10% to upside by the end of the year. We'll see. But right now, it's gradually climbing higher and starting to break out, and it's providing some leadership. On the quick S&P futures chart, so the earlier this is cash SPX as I was showing earlier, and now this is the S&P futures right here. So this is the S&P futures chart. As you can see, the overnight, a small little bounce in S&P futures. We're about 4.75 points. So we'll see if this triangle, this wedge formation that I've been describing, ends up actually a breakout versus a breakdown. Quick thing, real quick, the Constellation Brands, STZ, is out of earnings, is out with earnings this morning. And the stock closed at 165 yesterday, and look what it's doing overnight in pre-market right here. It's trading at $172 a share. So it closed at 165. It's going to open around 172. So we're going to have a massive breakout from this very beautiful consolidation after the last 3 months. So I know that many of you were asking about this in the chat room yesterday, and I mentioned that I'm expecting a breakout. I'm expecting fantastic earnings report. And quite frankly, it shouldn't be a surprise to anybody. I mean, here is my, just to show you real quick, if you just go to activity tracker right here, this is the activity tracker. I mean, right here, go to start, go type in STZ, and then you just click on my notes. This is... Sorry about all that. So here is the note that's recorded in the activity tracker, and you'll see that we discussed this on September 20th, but more before that, on September 16th, I presented a very detailed bullish view from channel checks in the chat room. We discussed some pickup and call option activity. We discussed that the weighted average of distributor responses indicated that Constellation Brands Q2 beer volume growth was 12.2%, which was the highest average that ever been recorded from our survey. We mentioned that that basically the comps that were coming out from the Nielsen check was very, very bullish on September 16th. I mean, the writer was pretty clear. Time for breakout and run. Keep an eye on this chart, and we just kept discussing this. So here is some of the channel checks that we provided. The momentum was extremely strong. Right here, big pickup in the beer volume and so on. So we have plenty of data that was discussed in this. So now it looks like all of that translated into exceptionally strong earnings report. Closed at 165. Another view like this. So right here is trading at $170, $172 a share. So we're going to have a nice, beautiful pop and breakout on this when the market opens. Another one that I want to quickly touch, Micron. Micron reported earnings last night, which beat on earnings and which beat on revenues. The revenue growth accelerated as expected. Margins improved, and the DRM pricing improved by 20%. I mean, so everything was pretty good about the stock. It was fantastic. But overnight, it tried to bounce, then it crashed, and then it came back down. It hit low of 16.84, and now looks like in pre-market it's starting to bounce again. It's around 17.3 after closing at 17.8 yesterday. So it's going to open down about 2.5% if it opens here. Bunch of analysts are already coming out this morning defending the stock. We got a note from Mizuho that's saying buy it on this weakness. Another note from Cowen saying buy it on weakness, and another note from RBC Capital buying it on this weakness. And this is what I pretty much expected. Remember, I mentioned that about 7 to 8 analysts going into earnings report had turned very, very bullish on this. Everybody was expecting a beat and raise. Expectations were high, but I knew that despite high expectation, the company was still able to meet the consensus view, which is exactly what happened. And so this weakness, in my opinion, if you get any weakness, it is presenting a buying opportunity. So so I think that if the stock opens around $17 a share, it'll be worth going into call options in this. Same thing on Lam Research. Keep an eye on this, because this Lam Research, I mentioned yesterday in the chat room that a good earnings report from Micron means that Lam Research it's a good sympathy play. So you're going to see a potential breakout in Lam Research. It is forming a tight bull flag right around here at $94 a level. Let me zoom in a little bit. So you see how it comes up to $94.95 and pulls back. Same beautiful consolidation for about 3 months ongoing. I'm expecting a breakout in this and a move towards $97.50 and potentially taking it as high as $100 a share. Lam Research is the cheapest in valuation, trades at 10 to 11 times forward earnings, also has a catalyst in play, which is the approval from China, Japan, and South Korea for its acquisition of KLIC, which was pushed out, which was a slightly negative report. It was supposed to happen in July, and now it's expected sometime in October, but it's coming. Most important thing is that KLIC, Lam Research on this new leg higher is coming on very high volume. So it is attacking resistance, and now Micron is setting a good stage for DRAM producers. Lam Research is one of them. So let's see if it can break out on this. And the last thing I want to discuss is my favorite trucking stock, PCAR. Oops, not this one. Here you go, PCAR. So quick note on this. See, first of all, technically from this side, if you go up to back in April, the stock rose sharply and came up to $61 a level on very high volume, and then pulled back. This is where the Brexit happens. Then the last earnings came out in July. Stock once again shot higher on very, very good earnings report. Came up to $61 a level and then pulled back. And now it's trying again, coming up to $61 a level. So this is the third time in about 6 months the stock is trying to break out through $61 a level. The more you keep trying on high volume, the higher the chances eventually you're going to break out. The reason why I bring this up is because this note that I pulled out from Bank of America yesterday, this excerpt from this, and it basically talks about why truck orders yet are still soft year over year, but sequentially they're starting to show, pretty steady improvements. So, you can pause this video if you're watching. You can read the whole note, but this is basically what I wanted to show you. According to ACT Research, the Class 8 heavy truck orders are basically, this is the trend. In June, it was the annual SAAR, S-A-A-R, the annual rate in America was running in June of 172,000. Then in July, it dropped sharply, 142,000. And then it jumped sharply in August, 191,000. In September, it came in 193,000. So you have 3 steady months of improvement, July, August, and September. So this bodes well for Cummins, which is CMI, and PCAR, which is CMI. As you can see, Cummins basically is the biggest engine maker in the world. For trucking companies, it had a beautiful breakout on this, and so you can see this is starting to break out now, forming a bull flag. So it really bodes well for Cummins. But my favorite in this group is actually PCAR, PCAR. So this, I expect PCAR to also break out and make a run towards 62, maybe $64 a level. But I'm expecting about 5 to 6% upside in this on the breakout. Now, quickly, just to let you know, the let's see, where is me? Right here. So if you go here, my bullishness, first of all, if you just go to Activity Tracker and type PCAR, you will see some of my notes over here from September 1st, July, some unusual call option activity that is still recorded in November. So let's go here, pull up the option chain. You'll see here's November. So this open interest you see in November 60, 62.5, and 65 is strike calls. All of this is accumulation from July and August period. Now if you click over here, sorry, it's going to make that sound again, all right? I open this. All right, so here you go. These are my notes that are recorded in Activity Tracker. One thing that you will quickly notice is you can see how this is the last earnings report from July 26th. EPS beat, revenues was a slight miss, and the 2016 European trucking guidance was very strong, strongest since 2008. But skip through all of this and go to what I said back in June 23rd. This is the key over here. Basically, in about April, May of 2016, PCAR it launched a brand new truck, brand new type of truck called MX11 heavy duty truck engine, which is the lightest version of its kind in the market today. And so PCAR basically is benefiting not only from improvement in the trucking orders sequentially, as I just showed, but also PCAR is basically still benefiting from the lightest truck engine in the entire industry that was launched in April, May. And so the demand is naturally higher for this. And for this reason, and I explained this all over here, for this reason, both stocks are very good, PCAR and Cummins, but my favorite, because of this new product launch that's currently still in play, I expect PCAR fundamentally to produce better growth than Cummins. And so you want to keep an eye out on both of this. I showed some charts over here. You can see right here. Here's the Cummins. Let me just make this bigger to make it clear. So here's the Cummins Class 8 engine market share. As you can see that this used to be what, 30%, 37%, and then is gradually coming down since 2012, 40%, 37, 35. So Cummins market share has been coming down, and year to date it is now showing only 32.5% market share. But look what has happened in the same time frame for PCAR Class 8 engine market share. It's steadily increasing, and it's at the highest level in history at nearly 12%. So that's why while PCAR benefits not only from the actual improvement, sequential improvement in the trucking industry, it also benefits from a market share gain. So you got two good stories playing out over here. Otherwise, I think both of them are going to do just fine, and they're breaking out. So keep an eye on the sector. Class 8 truck orders are coming out very strong. PCAR sets up for breakout. Do not be surprised if today, tomorrow, or sometime this week or next week we see incremental amount of call option activity. So I'm going to point out if I see this in November or so on, and same thing with CMI. Expect CMI to break out as well. So with all of this said, those were the only things that I had in my mind this morning. I'll see you in the chat room shortly.